everybody. This is Toni Turner, and welcome to the market now as of Friday, October 8th at about 12:45 p.m. Eastern. Well, the Federal Reserve may move to begin reducing its support for the economy next month, despite a sharp slowdown in job gains last month as the U.S. surge in COVID-19 cases crested and began to recede. Though employers added just 194,000 jobs in September, a report from the U.S. Labor Department said this morning the economy has regained half the jobs deficit it faced in September compared with pre-pandemic employment levels. So on that note, let's go on to three charts that could give us some insight into the week to come. First, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our S&P 500 index. And we do follow this because as traders, we want to have a good idea of how the overall market feels. It really helps us decide whether to enter trades or whether to not enter them a lot of times. So the SPY closed back here. Hold on just a second. Let me get my pen out. I thought I had it. The SPY closed back here September 2nd at the newest all-time closing high at $453.19. Now, since then, it's rolled over, as you know, and the SPY started falling. And as September wore on, and look at all the volume here, you can see a lot of selling going on here. So it continued to roll over, went below the red line, the 20-day moving average, fell below the green line, the 50-day moving average, down below 430, rallied back up, fell back down, gapped down. You see it got up to the 50-day moving average right here, but could not, and we talked about it that week, could not continue higher, got knocked down by it, gapped lower, fell down here to lows of 426, then rallied Thursday of this week, and today staying gapped up. And right now, as I captured this chart, the SPY is trading at $438.15, or about $43.81 on the S&P 500 itself. So this gap up the last couple of days, that had to do with the debt ceiling in Washington, D.C. So now we're holding. And we're up at this line right here, and you can see the 50-day moving average. It's coming in at $442.80. We can just call it 443. Now, what was support, this 50-day moving average was support for, you can see how clearly that the SPY would come down, even if we look further left on the chart. The SPY would come down, but then stay above using the 50-day moving average like a trend line, and it does tend to do that in the broader markets when it's a healthy market. September and October can be pretty cantankerous months. That's a seasonal thing. We've been going up here for a long, long time, and all told, of course, about 11 years. And for our bull market. So at any rate, it did fall down, rallied back up, and now the 50-day moving average, call it 443, is still going to present some resistance as the SPY is trading below it. So we just have to see how much. Now, we do have price resistance up here at 454. That's price resistance. That's right around the all-time highs. So we do have that. We do have the 50-day moving average. Again, we'll call it 443, acting as price resistance. We have support down here at 426, where price consolidated here during the past week. And then, of course, we can see potential support at the 200-day moving average at $414.42. We do not want the SPY to go below the 200-day moving average. Going below the 50-day is one thing for a little while, but going below the 200, that can be a little more excitement than we want. So really, we are right here where the rubber hits the road. If you can see the little red dot that is today's trading right here at 438, we are really where the rubber hits the road here. Next week, we have to see, can the SPY, and we had as I told you, kind of a bad jobs report today, can the SPY push back up above 443 and start heading back up to its all-time highs? Or if it can't get over this 50-day moving average again next week, maybe it has to make another leg down. And the reason we watch it is because most stocks, not all certainly, but most stocks will follow the direction of the S&P 500. So if the S&P is riding higher, it's usually a bullish sign for entering a position. If it's falling really hard to the downside on really bad news, then it may be something that you may want to wait. And we'll talk about that a little more on the next chart. The next chart we always look at is the Invesco QQQ, symbol QQQ. This, of course, represents the NASDAQ 100, very important index in the market. Top holdings include Amazon, Apple, Alphabet, Facebook, Microsoft, that whole group. Now, the QQQ made its all-time closing high on September 7th, at $382.11. Today, when I captured this chart, the QQQ was trading down here at $361.98. It's trading at about 5% off of its all-time high, as opposed to the SPY, which is trading about 3% off its all-time high. So as you can see, again, it made its all-time high, as I told you, back here on September 7th, 382. Similar to the SPY, not quite, fell below the 50-day, rallied back up above it, fell down lower this week, and so now, and down here to 350, it made this low down here to 350. Then this Thursday and today, Thursday it gapped back up here again on news out of Washington. It's been holding that level today at 361, call it 362. Now we have to see again in the coming week if the Qs have the strength to move back up above the 50-day, call it 370. Can it do that? If it can't, and of course these big momentum stocks in the Qs are certainly market leaders. If it can't, then does it have to make another leg back down? And if it does, can it hold at 350? So those are numbers you're going to want to keep at your elbow. So resistance does remain up here at 383. That's resistance. Down to the 50-day moving average at 370. Price trying to move up above that. We just talked about 370. We do have support here at 350, potential support. And of course, potential support here at the 200-day moving average at 341. So the question is, now here's the question, is this past week's price action, this consolidation, is this the low for this month or this quarter or this particular move? Is it the low? Because people want to buy at the lows, so do I don't blame you. However, if and how do you know if it's the low? If you're buying the lows and price is going to pop right back up and trade back at all-time highs or near them, well, you have to wait. If you want to really know, you've got to wait until price makes, if it does, a higher low, an even low, maybe back to 350 and bounces, like to make a W type, a double bottom type thing. That could be a low signal, or if it makes a higher low above 350, say 358 or so, and then starts back up. That is where you feel a little more secure in placing a buy the dip kind of, or buy the lows kind of process. So we won't know if this is the lows until it makes an even low and goes higher, or if it makes a higher low and goes higher. Otherwise, if you want to get in at this so-called low, and we call it a tradable low, then I would really, really, really advise, if your stock looks anything like this, I would really advise putting a stop at least, below the low put a hard stop in with your broker. That's what I'm going to do, and I really suggest it because after all, saving our capital and protecting our capital is the most important thing we can do. Okay, let's go on to our next chart, our last chart. This is an ETF we haven't looked at in a long time. This is the Invesco Dynamic Leisure and Entertainment ETF, symbol PEJ. It has 26, I believe, holdings. I didn't write that down. I should have. Top holdings are McDonald's, Disney, Viacom, Starbucks, those kinds, Chipotle, I think I said. Now, when I captured this chart today, the PEJ was trading at $52.36. If we look back here in March, it did make its all-time high for this particular ETF. The all-time high was made back in March at $55.25. Then it gradually fell pretty dramatically, and that was March of this year. Then it fell pretty dramatically. I think this is when the Delta variant started rearing its ugly head. It fell pretty dramatically, and it tried to get back up over the 50-day toward the end of March into April, couldn't do it, bounced again, couldn't keep going. Came down to these lows here at 42 in May, then started back up, actually pretty dramatically. Some big moves here, got back up here to like 53-ish, then rolled over again, made these lows up here around 47 and change, then made a lower low, as you see, lower highs and lower lows coming down here. So it did try to break out, but it couldn't. And it broke down, then popped back up over the 50-day moving average, wandered along sideways for a while, going into the first part of September, and is now starting to break out again as we see, hopefully, that the Delta variant is calming down a little bit. So right now, again, the PEJ is trading at $52.36. It's gapped up as well Thursday, Friday of this week. And we're watching it hold here at $52.36 above its 20-day moving average, which is coming in at $50.67, nicely above its 50-day moving average, which is coming in at $49.65, and a nice and in the 200-day moving average down below at $47.75. So if in the coming week, now look, if the market starts down hard the first of the week, I probably won't get into it. I would like to get into this a little bit lower than 52.36, but I'm going to do it gradually. So if the market's coming lower this next week, keep an eye on it. But I will, if the market is not too cantankerous this coming week, I will add a small position to my trading portfolio if the PEJ can stay above the $50 level. I'm just going to use 50 bucks. That's where if it can stay above that and the market is positive, I will add a small position to my portfolio. Now, if and when it rises above 54.75, and that's over here, if and when it can rise above that price, I will add to my position, and of course my stop will be a trailing stop. So you may want to keep an eye on the PEJ in the coming week. And now for final thoughts, there's a saying by Lena Horne. Remember Lena Horne? She goes way back, right? The saying, what she said was, it's not the load that breaks you down, it's the way you carry it. I love that. It's not the load that breaks you down, it's the way you carry it. So, and that brings us to our question of the week then. During the trading day, do I ever feel tired and confused as though I am carrying a heavy load of worries? Does the market affect my mood after the market closes? And if it's a bad mood that I get into, does that ever carry into the evening with my family and friends? And if it does, is that acceptable to me? And you can kind of look at yourself and without accusation, see if that's something you've got going on right now. Surely one of the most difficult actions we can take, especially when we're novice traders, is to maintain feelings of calm confidence during the trading day. And even though it takes a lot of effort, we also want to stay mentally nimble and neutral so we can make the best decisions and follow our trading plans. In order to keep those kinds of mindsets intact instead of the confused, worried one, and to enhance your trading results, please be sure to take breaks during the trading day. Leave your desk for lunch. Taking breaks refreshes your mind and body, and it helps you look at things a different way. As well, please do not overtrade, and that means you're starting to make a couple or three losing trades, so then you start making a whole bunch of trades in a row to try to get your money back. That's not a good idea, because the way you're looking at the market could really be negative and not helping. So don't overtrade, and don't do revenge trades, the kind that say, all right, Mr. Market, you took my money and I'm going to get you back. Don't do revenge trades either. The market doesn't care. Believe me, I've had personal experience with this many years ago. No overtrading, no revenge trades. Instead, do what you've heard a million times, but what works the best. Plan your trade and trade your plan. And when the closing bell rings and you leave your desk for the day, please take a minute to mentally leave the market yourself. Turn your focus to the evening activities. Turn off your market brain. Know that if you've had a losing day, tomorrow is a new opportunity to learn, grow, and find new trading prospects. Finally, please know that this is a great time to check out all of my trader training programs. To see all of my online training programs, simply go to the link on this screen or simply click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.